Hey everybody, Brian from Rebel Traders here. It's the weekend again. It is July 8th, Saturday. Hope everyone's having a good weekend so far. And this, of course, the weekend video will go over what happened last week, and then we'll take a look what's coming up. We're back into earnings season as we get into Thursday and Friday, so everybody will be watching what kind of reports are coming out here. But let's get into it. So let's start out with the week in review. This was a shortened trading week due to the July 4th holiday. So anyway, we had a stronger than expected ADP or employment report that came out Wednesday. That wasn't particularly received well by the bulls because it was strong and it sort of assured more rate hikes are coming, even though the Fed keeps telling us that. So Friday's employment report came out as well. A little cooler than expected, 208 jobs created versus 240 expected, but 208 is still a strong number. I think we're used to strong numbers coming out of the pandemic, but those are sort of exceptional circumstances, and that 208 number is still pretty strong. Hourly wages also continue to rise 4.4% year over year, and of course that's not something the Fed wants to see either because that's fueling inflation. So pretty much assured us of a rate hike coming up here in the next couple of weeks, and after the FOMC July meeting. Got that coming up here. And the markets ended up selling off for the week because of all this strong employment data, probably, and really sold off into the afternoon on Friday. Just accelerated into the close. So you can see there, Dow almost down 2%, the worst of the bunch, and the Qs down just under 1% there. So a little bit of weakness going into the weekend. Consumer cyclicals and utility sectors were the strongest gainers. That's kind of a strange combination because utilities are typically a safety trade, whereas consumer cyclicals are more of a risk-on trade. So anyway, healthcare and basic materials were the biggest losers on the week. Two-year Treasury just up just a hair after popping its head above 5% there. And the 10-year was up. Now it's up over 4%. And I think that's giving a little bit of heartburn for the bulls as well. But US dollar down on the week about 0.5%. So dollar weakening up a bit there. And Bitcoin, again, sort of just flat on the week after some pretty volatile action previously. So that's where we sit right now. And so before we get into looking at some specific charts over the last week, I just want to do again, as always, a quick plug for my book on Amazon, Profiting as an Active Trader. There you see it, management, rules, strategies, and routines of an active stock, and a little bit of options thrown in there as well. So you can check that out if you want to see how I trade. And let's get into looking at some charts now. Starting out with the 2-year, again, we really seem to be kind of stuck in a range. We are still slowly sort of grinding higher here on the 2-year. Again, sort of pricing in more rate hikes in the treasuries. Big move on the 10-year, and again, a reflection of more expected rate hikes from the Fed. They're expecting at least 2 more this year, and sort of data dependent from there, but we're back up over 4% where we poked our head above here, and just back in February. We are now sort of breaking out here on the 10-year. So interesting price action there as we continue to move higher. This is not necessarily a great thing for stocks, but because they say as yields move higher, makes just putting money in a safe haven is more attractive. But markets still can go up on rising yields, as we've seen in past history. So let's take a look at transports again, and gauge on economic activity in the economy. Actually, transports didn't have a bad day given the sell-off we saw into the close on Friday. So you can see here, tried to push above here and couldn't do it. So it'll be interesting to see what happens next week. This is some volume here building on these last couple days as well. So transports, again, kind of just stalled here right at a level of prior resistance. And let's see here. As we get into the Dow, this is the daily. You can see here what happened after this ADP report came out Wednesday. We sold off pretty hard these last couple of days, right down into an area of prior resistance, which has now become support. And again, we're kind of trading range bound a little bit on the Dow on a weekly. Again, very range bound. If you look at it on a weekly basis, there's your sort of 4,500 level, and this support right in this area here. So we could be a range bound waiting for these earnings reports to start coming out and see what companies are saying about their earnings and forward-looking guidance. Probably more important. Qs, again, sort of a rough end of the week there, well off the highs of the week. Had a nice rally going in on Friday into around noon until we started selling off. So we ended up down on the week. But again, we're kind of stalling out here. But you could make the argument we are still in an uptrend. There's no question about that. A little bit of a pullback to a trend line on the weekly. The daily on the SPY, again, sort of same comments. Rough end of the week there. And again, still broken out, still in this uptrend that's not changes. You can see here how we had an up day, a down week, and then this previous week was an up week. Now we've had another pullback again, but the trend is still higher. And again, we'll just be seeing how earnings play out. And again, IWM. IWM actually didn't fare very badly. I mean, it held up the best of all the indexes on Friday. You can see here we did finish above Thursday's low, well above it. Well, off the highs, but still off Thursday's low. And you can see here again, we're just, there's your first level of resistance right around that 190 level. And then if we push through there, it could be 195. And again, we are seeing a series of, we had some bottoming action here. You could consider to be a higher low. And this 200-day, all these moving averages actually are now looking like support. So in that 179.80, 180 level looks like support for IWM. And IWM made up small caps, U.S. stocks primarily, a lot of regional banks. And if you believe the economy is going to improve, this is the index to be in. It's really been lagging some of the other indexes, so maybe some money rotating into there, looking for another place to go that hasn't run up as much. The VIX, again, we had this nice on the market sell-off, we had this pop up. Friday, we really sold off. Typically Friday the VIX does drop a bit. It did come off the low of the day, but that's where the VIX ended on the week. We're still way down in the basement there on the VIX. UUP, you can see here, big, we've had this sort of double top, and then we had a double bottom, and then we've kind of had some topping action here right back at prior resistance, where we were here, here, and then again, rejection on this candle from here, and now we've sold back off. And again, if we are range bound trading, this is kind of the range we're in right now, this 28 to 28 sort of 60 level. Seems like maybe we are in a range, but again, really this could be a lower high. And I'd be watching to see if we do actually break down below this moving average and then break below 28. Some weakness. But if interest rates are rising, that will help support the dollar, no question about that. Again, on the week, we are sort of narrowing into a pennant there, looking to break one way or another. And here's your Bitcoin. It's down a little bit on the weekend. I was looking at it on Friday, it was 30,300. Now it's about 30,160-ish area. So again, just kind of banging our heads here on this 31,000 level. And of course, SEC put the sort of nail in the coffin for BlackRock coming out with an ETF or some kind of a structured package on that. And but Bitcoin really didn't sell off that much. Had that big pop on the news here, as you can see that. But the SEC's decision really didn't impact the price of didn't fall back here into the under 30,000 level. So holding up for now on Bitcoin. So let's take a quick look at some of the stocks I'm watching for next week. Alcoa had a big week today. Both Alcoa and had a big day on Friday. Alcoa and U.S. Steel. I'm sure Nucor had a good day as well. For some reason, some of these material stocks really took off. So you can see here Alcoa sort of putting in a bottoming pattern here. 32 seems to be the low. So I'll be watching this for next week to see if it does break out. Alcoa will be one of the first ones to report. They usually report in there in the first week or so, so I'll be watching that. I don't like holding stocks through any positions on stocks through earnings on swing trades, so maybe watching for that for a possible trade after earnings. Particularly Apple. Again, I had some traded some calls this week on Apple and worked out fairly well. But you can see here we are really this after we got to this 3 trillion level on valuation, it really pulled back. We didn't even get close to 200. I actually bought some 200 calls. Just only bought 10 of them. They cost me 10 cents, I think, or 11 cents, on just to see if it could go there, but it didn't. So lost $100 or $150 on that trade because I just let it expire. Wasn't worth even closing it out. But again, we've come back. We filled this gap up here. And I think we're going to be range bound on this. We've got support here, so I'm looking to maybe sell some upside calls next week, and maybe sell some downside puts, and just take advantage of the support that's there for Apple, and the resistance after this monster run up that we've had. Just a most beautiful chart, keeps coming back, testing this 20 moving average, and then just keeps going higher. So anyway, here's AI. I was keeping an eye on that one. Really significant pullback. Now it bounced back up. Really sold off hard on Friday. You can see here, tried to break out and really was rejected. So could be a little bit of stalling action there. I don't know if I'm going to trade that at all this week. Amazon's just really, again, you can see how we're just stuck in a range here. Definitely some support here at sort of the 126, 127 level. Definitely some resistance here around the 131, 132 level. Again, possible for a sell of puts or calls. Baba had a big day on Friday. I guess put some of the um, they paid the Chinese government came out with this edict about how much they were going to get fined. I think it was less than expected, and maybe people took that as a positive that maybe the Chinese authorities were kind of finished with beating up the tech sector. So you can see here this sort of 92 level is an area that's quite interesting. We almost got there on Friday. 91.60 roughly was the high, but that is definitely sort of the high here. We tried to push higher and close below it. And again, this sort of 92, the 91.43 was the high here. This was prior gap up. Sort of, what was that, 90, low 92.06. So this 92 level seems pretty important. So I'll be watching that. If we do break out, we could be going up, into the 95 range here. So keep an alert on that one. Google, again, Google seems to be struggling here. It's, this 126 level. Again, I suspect there will be some support here in this range. So again, possible for put call sale. I'm still short some 42 calls. I did sell a fair amount of them when we dipped down here on Thursday. Still have a few left, and they will expire not this week, but next week. And might actually take out the rest of those. I'm a little bit concerned about holding these through bank earnings. Don't really want to be exposed to some positive earnings that come out and having that stock rip higher, ETF rip higher. Netflix, again, we're kind of topping out here. Seems like the sort of tail of a lot of these high flyers. We're now sort of consolidating in a range. Again, gives you an opportunity to sell puts or sell calls, just to take advantage of some little bit of movement up and down, but no direction. Nvidia, again, sort of same story, really. We had this nice big gap up, had to push higher, couldn't get above this this 440 level, and now we've got, there's always buyers there. which gives you some confidence that you can sell some downside puts and the upside calls. If you're not comfortable with being naked on these, you can always sell a call and then buy a call slightly higher. It really it limits your risk, but it also lowers your gain as well. You can do that for puts as well. Sell a put and then buy one lower. Rivian's had a real ripping day here, or ripping week, I should say. Good earnings report, and you can see here it's really extended. I have sold some 22 puts because I think if it gets bought, I think if it gets down here, might be even willing to hold them. So hold on to them and take them. So I got about $1.30 for them, I think, at the time I sold them. So 2070 is where I'm losing money. And like I said, I think everyone's all of a sudden becomes really positive on Rivian after this earnings report. So a good one to be trading. SDGR, this is again an AI play, and again it's a little volatile here, getting pullbacks. No position now on it. Tesla again, potential for a gap fill after this gap up, but again Tesla just keeps finding buyers when it pulls back. X, the last one I'm looking at here, second last. Again, real strong day on Friday despite the market sell-off. Always look for these anomalies when something's really strong in the face of market weakness or vice versa. So this pulled back to was down at 23 and it really rallied hard on Friday. So I'd be looking for a possible follow through here to see if we go higher on the week ahead. And I'm going to start featuring one ETF that I think is worth watching next week, and this one I picked out this week is energy. Energy seems to be it had a really good day Friday despite the market sell-off again, as I mentioned with X. And I'd be watching for a breakout here of 82 next week. If we can break above 82, then there could be a bit of a gap fill up into the 83s and 84 levels. So I'd be watching XLE. If you're watching a sector, that would be a good one to watch. So that's it, everybody. And just wrapping things up here, July 10th, week ahead. This is actually a full trading week after the last couple of weeks of partial trading weeks. There's your levels on the Dow, Q, SPY, and IWM. We're all sort of sitting mid-range here. And economic events that are coming up. We've got some Fed speakers on Monday. 3 p.m. consumer credit. Nothing of note on Tuesday, Wednesday. This will be the big event here. 8:30, we'll be watching for the CPI data to come out. Everybody will be watching to see if that's still continuing to cool. PPI data, which is the producer price index level. Again, that'll be coming out on Thursday. Again, so everybody will be watching that. Of course, usual jobless claims. And on Friday, import price indexes and consumer sentiment. And earnings, as I mentioned here already, we are getting into earnings season. This is it, once again. Thursday kind of kicked things off with Pepsi, Delta Airlines, ConAgra, Cintas, real combination of airlines, sort of consumer product and some industrial stuff there, and ag. And then Friday we kick off with the banks, and that's really the start of the earnings season. We get BlackRock, Citi, JP Morgan, Wells Fargo, and of course a health UNH, big monster there. So interesting. We'll get into earnings at the end of the week, and then we'll be looking for a slew of earnings over the next couple of weeks here. So that's it, everybody. Hope you had a good weekend and are having a good weekend, and we'll look forward to seeing you, hopefully starting out the pre-market show Monday morning, and then into trading with our members at 9:30. So take care, everyone. Have a great rest of your weekend. Bye for now.